It's been a big month for some brick-and-mortar retailers. Walmart had their best U.S. sales performance in a decade. Macy's posted better than expected earnings a week and a half ago, hiking its annual profit forecast as well. But some retailers have struggled to keep up with online platforms like Amazon. And while tax reform and employment growth has helped to stimulate consumer spending, how retailers adjust to the digital economy could determine their survival overall. Joining me right now to talk retail and the economy is Terry Lundgren. He is the former executive chairman and CEO of Macy's, and it is great to see you.
Maria, great to see you as always.
Thank you so much for joining us. We want to get your take on really what's going on, sure. Terry. Congratulations on an incredible run at Macy's.
Thanks.
I want to talk about that as well. But how would you characterize where we are right now in terms of retail?
I think we're in a really good place. I think there's been a lot of activity that's taken place, particularly over the last few years, as retailers had to pivot once more to the changing consumer environment. But right now, Maria, consumption is strong. Consumers are feeling good. They got money in their pocket. Tax reform has been positive. And all these changes that have taken place are starting to get some traction. So you're seeing really strong results, not just from Macy's, Target, Walmart, Kohl's, Nordstrom, lots, broad spectrum of retailers doing well. I think that's a really good sign for fall.
Yeah, it's a good sign for the consumer. We got the consumer back. You've reimagined Macy's a number of times. You basically changed the look of it. You made a lot of acquisitions. You were, from 2003 to 2017, the chairman and CEO of Macy's. What a run, Terry. You've seen a lot.
I know.
Tell us
and
how
then I was executive chairman until February 1st of that, so I was still in the saddle for a long time. You're right.
You're amazing.
It's been great.
So it's been an incredible tenure. So congrats to
Thanks.
you. Tell us how you've changed. Your leadership has changed Macy's over these years. And what did get you to the fact that you say, yes, people have been reimagining and changing and adapting to a new economy?
You know, being in the business as long as I have, and I was CEO of Neiman Marcus before that for 6 years. So I've seen, Maria, these changes that take place constantly. Every 4 or 5 years, there's a major, shakeup to the consumer, and then retailers must adjust and react. And it's not a small pivot very often. It's often a very large one. And so we're used to this, and you can never get comfortable. We had from 10, 11, 12, 13, 2014. Unbelievable. We averaged growth of $1 billion a year at Macy's and Bloomingdale's, and then we had earnings ratios just kept going up and up and up. It was just like, this is easy. And then the minute you think this is easy, forget it. The consumer changes, and you have to pivot once again. And so I think all retailers face these changes that occur largely by the consumer, and you got to get in front of it. You can never rest. You have to always think, what's next? How is the consumer going to act next? And so I think many of these companies that are doing well now didn't start changing their strategy last quarter. They've been doing this for months, for years, for even a decade in many cases. And so you have to address the consumer in the store, the consumer online, and recognize that she doesn't shop in one or the other. It's all connected to this omni-channel experience today.
Which is what you did when you look at some of the discounts, right? You
yes.
had the discounted Macy's products in a warehouse, or I don't know, was it?
Yeah, it's an off-price.
Off-price.
So and what other people don't recognize that, and particularly in 2016 and 17, a lot of the share shift was not what people. Is it moving to Amazon? Well, sure, they did a great job. It's really not just that, and it's certainly not just the online component. Macy's is the 4th largest internet company in America, so they were very strong there, still are. But the off-price channel was starting to attract this millennial consumer who replaced the baby boomer, who's no longer spending because they don't need apparel for work and the like. So the millennial consumer likes this treasure hunt and liked this off-price, and it wasn't as focused on brands.
They want a bargain also.
They want a bargain.
Yeah.
And so Macy's said, well, hey, why don't we create our own off-price business? We did that, opened some freestanding stores, and they were fine.
Your stock has done so well, up more than 50% year to date. But last week, you had a big sell-off, 16% in a day. What do you think happened there? And by the way, we should point out that the stock is still, 7 is the PE?
7.
Trading
yeah.
at 7 times earnings.
Yes.
You don't
yes.
see that with the rest of the market trading at 18.
That's right.
But what do you think happened last week with that 16% sell-off?
I think that individuals were saying, hey, this has been a great run. Let's take some chips off the table here and cash it out. And they can always buy back in on the dip, which I'm sure they've done.
It's come back a bit.
The stock has come back. I think they've already gained more than half of what they lost on that day in just a few days, just based on the fundamentals. I mean, earnings were very positive. Comp store sales, people didn't quite get the shift, and I talked Jeff through that, no matter how often you say it, it's going to be hard to understand when you shift a big event. They had a friends and family event a year ago. This year it was in quarter one. Last year it was in quarter two. So obviously that's a big shift. And it comes back to, should we report, in a semi-annual way or in a quarterly way? I think if Macy's reported in a on a semi-annual basis, you would never have had this, up and down, because it had been more gradual.
So you like the idea of getting away from the short-termism?
I never liked short-term, and I never liked managing to a quarter, and you let chips fall as they will. But it does, frankly, influence short-term investors, of watching the stock on a daily basis or certainly a quarterly basis.